So we're here with Fady Wakil, who's Head of Treasury at My Money Bank. So welcome, Fady, to the conference. So we've just got a couple of questions I want to ask you today, get your thoughts on the market. So funding conditions are currently very good. What is the biggest potential problem that could upset the market in the medium term?
Mm-hmm. Yeah, absolutely. Funding conditions are actually pretty good. Investor tone is very supportive. But it doesn't mean that navigating the environment is not tricky. So we've witnessed this actually recently. Our most recent issuance that we actually did on Monday was twice oversubscribed, so we're pretty happy with that. But approaching the market wasn't that easy because investors are currently split. Really, the universe of investors is split between investors who managed to overcome the hurdle of negative rates, I would say, the bank treasuries, and investors who are still a bit hesitant about that. So pension funds, asset managers, they're still not ready to invest in negative or zero environments. So, plus, and then you always have the investors who are more opportunistic and just are looking for a new issue premium.
Yeah.
I mean, in terms of threats, the most imminent threat, I would say, is today's announcement from the ECB that there's potential downside from there, but you never know. On the longer term, I think potentially a tweet, anything could drive a change in the sentiment. The trade war, the Brexit, all of that, or a combination of those, could impact and could create a stop to the growth that we've seen in most recent years. And for us as lenders, although negative rates, low rate environment could seem as attractive, it actually isn't really. What really matters to us is credit spreads. And if there's a global downturn, it could impact customer behavior, increase defaults, and it could also definitely impact investor behavior and therefore impact credit spreads. So this is really how
Definitely. And then moving on to some other obviously changes in the market. The covered bond directive is going to be implemented over the next couple of years, I think we say. What will be its long-term impact on the market?
I mean, first of all, we think it's great having a directive that really harmonizes the approach across jurisdictions is really a good thing for us. My Money Bank SCF was actually one of the early adopters of the covered bond, because even before its implementation, we decided to structure our program, making sure that our program would be compliant with its requirement, for instance, the soft limit, non-discretionary extension. So we think this initiative is very good. It creates better comparability between different covered bond issuances. It increases the robustness of the investment type. And it helps create more investor confidence. Plus, it really consolidates the whole covered bond universe under the EU framework, which is a really good thing.
Yeah, definitely. Good. Thanks very much, Fady.
Thank you very much for having me.
Thanks.